principles. That's the map. So the road follows the map, all right, or the map follows the road. Let's not get abstract about it, but we have a map which is Hurst cyclic principles. Okay, we also have a GPS which is Sentient Trader, and it performs an analysis, and it gives us an idea of where we are on that map. And nevertheless, the person driving along the road is you, and so when you are approaching a turn, you need to be on standby to be making trading decisions. And so for some time, we've been considering walking into this trade, which is a trade coming out of the 40-week cycle trough. Now, we've been focusing on our analysis in the US markets on one particular analysis, which I believe is unfolding in such a way that it looks as though that moment is now upon us, and that the market is moving out of that 40-week cycle trough. In the Australian markets, we've been focusing more on the alternative analysis, which meant that we were expecting the market to bounce out of an 80-day cycle trough, and there to be more time before the 40-week cycle trough occurred. However, it's always very important that you don't just keep your eyes on one analysis. You also look at the alternates. Okay, and this has been a very viable alternative, and so this is an alternative that that has been sitting sort of on the back burner, if you like. When the other analysis started encountering problems earlier this week, I believe this alternative became a more likely one. But both analyses are still possible. I see a question for Jitendra. I had the view earlier that the Aussie buy should not be considered as it was going to be a small bounce. Has that view changed now? Well, let's talk about that. Has that view changed now? Okay, and let's pop up some FLDs and talk about what we possibly should be doing at this point. And let's go to this one here and put up some FLDs. Okay. All right. As Jitendra said, I was last week speaking about making a buy in the Australian market as it bounced out of the 80-day cycle. And let's just do a quick sort of recap on that discussion, if you like. And this is the analysis that we were looking at. And let me turn off those FLDs again. And let me just zoom in a little bit. Okay, this is the analysis. It's changed slightly, but I can draw a few squiggles on the chart. So here's a reminder of the discussion that we were having last week. So imagine that this week's price action has not occurred yet. Okay, we were talking about the potential formation of this 80-day cycle trough not being here in the third week of April, but in fact having occurred early in May. And I was talking about what is the cycle shape that we're expecting for the next 80-day cycle. Well, the cycle shape, of course, that we were expecting was a small and rather insignificant bounce out. You'll remember, bearishly shaped cycle, and then the market moving down further into there. That is why I was not considering entering into the Australian market on the basis of this analysis. And you must remember, all trading decisions are informed by the analysis. It's one of the big mottos. The trading that you do is because of the analysis that you have performed. And so there is always a cyclic reasoning for any trade. So the cyclic reasoning for this trade was market is bouncing out of an 80-day cycle trough. So when you keep your trading journal, you should write down there, market is, I believe, according to this analysis, bouncing out of an 80-day cycle trough. I don't want to enter into this trade because it would be a bearishly shaped cycle. Okay? So according to this analysis, I would not want to enter into this trade. Okay? All right. If this is the only analysis that you were watching, which of course we don't recommend. I do believe it's important to keep an eye on other analyses. But if this is the only analysis that you might have been watching, then what would have happened? Well, of course, the disadvantage with trader chats, Oz trader chats, is we only catch up with each other once a week. We only catch up on a Thursday, so it's impossible to say day by day exactly what would have happened. But of course, if you're trading a market on an end of day basis, you should be updating your analyses and updating your charts every single day. And as we're updating your charts on Monday evening, and I'd be interested to hear whether any of you have been updating your analyses and hear when the change in the analysis occurred for you. But I suspect it was Monday evening. I admit I'm not doing the Australian market every single day, so I can't speak with authority on this. But earlier this week, it might have been Monday evening, or might have been Tuesday. The analysis would have changed on this chart. And when an analysis changes on a chart, it's cause for you to sit up and say, hang on a moment, that analysis has changed. Maybe there's something not quite right in this particular analysis. And as soon as the analysis changes, you need to say, hang on, am I making the correct trading decisions on the basis of this analysis? Now, I suspect that on Monday evening, after this big drop, the analysis would have changed, because it's too late, as I've explained earlier, to position the 40-day cycle. Therefore, the 80-day cycle had to come earlier, and SentiTrader does not want to put it there for various reasons that we don't have time to go into now. And it's positioning the 80-day cycle in this rather nasty position over here, big question mark, and it's positioning the 40-day cycle somewhere over there, another big question mark. So on Monday evening, it would have been cause, when an analysis changes and the analysis has question marks attached to it, question marks of your own analysis, you need to start looking at the alternatives. If you hadn't looked at the alternatives, then yes, Jitendra, we would still be sitting here saying, we don't want to get into that trade. However, even with this rather questionable analysis, if we zoom in, you can see that what the analysis is saying is happening at the moment is that the market is falling into not an 80-day trough, because that 80-day trough now occurred somewhere way back there in the third week of April, but it's approaching the trough of 40-week magnitude. One of the very, very important things that I've got to emphasize is that every day there is new information that comes from the markets. That new information is the trading activity from that day. SentiTrader uses that new information to update its analysis. If the analysis changes, then the trading decisions that you're making also have to change, because you were making trading decisions yesterday on the basis of the 80-day cycle, and now we're making trading decisions on the basis of another cycle. Okay, so even if we had stuck with only this analysis, okay, as soon as that change in analysis had happened, if you didn't interrogate the analysis too carefully and you didn't make it into a really good analysis, I don't think this is a good analysis. Why? Two very good reasons. Question mark there. Question mark there. It's not rocket science. It's really easy. Those troughs just don't look right to me. Okay, so I would have discarded this analysis as soon as the update happened, which was, I expect, on Monday night. I would have disregarded this analysis. But even if I wasn't keeping up with things and wasn't, looking at the analyses carefully, even if I wasn't, I would nevertheless see very clearly, okay, the analysis has changed, so what's actually happening here? Well, what is happening? What is happening is the move that we've been talking about since the very first Austrader chat. We've been talking about moving into the 40-week cycle trough. That move looks as though it is happening already, according to this analysis. Okay, if there's anybody who doesn't understand that, then speak up now or forever hold your peace. Why do I say we're going into that 40-week cycle trough early? Well, here it is. Here's the circle and whiskers. Okay, there's the circle. There are the whiskers. So this analysis is suddenly telling us, whoa, hang on, we're getting into this 40-week cycle. We're getting in there early. Okay. The trading decisions that we made yesterday or on Friday no longer valid. Does that mean that we were in a losing trade already? No, because trading decisions made using Hurst cyclic principles are always made using stop entries and stop exits, actually, as a matter of interest, although you could use exits in market under some conditions. But you always use stop entries. So even if on Friday, and I'm still answering Jitendra's question in a very long roundabout way, even if on Friday you had chosen to let's do this properly. On Friday, you'd watched Trader Chat the day before, and you knew that the market, or you thought the market, was still coming into an 80-day cycle trough. You don't want to buy it because it's going to be a bearishly shaped cycle. So you would not have set any entry orders. You have slept peacefully over the weekend. You have no entry orders in the market. Monday you wake up, you see what happens. You don't have any entry orders because you're not planning to get into the market, and the market falls. Okay. And so it looks like everything's going well. You update your analysis on Sentient Trader, and the analysis changes. That 80-day cycle has moved over to there. When an analysis changes, trading decisions have to change. Okay, so you have to go through your trading decisions again. This analysis would have changed, and it might have caused you to go over to your alternative chart, which is this one over here, and take a look at this analysis. All of a sudden, this analysis is looking a whole lot more. It's looking a whole lot more likely. It's looking a whole lot more possible. Now, what are both of these analyses saying? Both of these analyses are saying that the market is moving down into the 40-week cycle. Something we know. We've been talking about it for months. Okay. And it looks as if though that 40-week cycle might be upon us a lot earlier than we were expecting. Okay. Is that a disaster? No. We've been expecting this cycle trough for a long time. A very important principle of variation. You know there's going to be variation in cycle wavelengths. You know it. Okay. I can tell you now, the next 18-month cycle trough we're expecting early next year in March. If somebody phones me up in November at the end of this year and says, I think that 18-month cycle trough is happening now, is that impossible? No, it's not impossible because of the principle of variation. Okay, I might be expecting it only in a few months' time, but an 18-month cycle can have a 35% to 50% variation. Okay, so so we're expecting things to change as your analysis changes, and as your alternative analysis looks a whole lot better. As I pointed out, there are a few question marks on this analysis as well. Those question marks in particular are the placement of that 40-day cycle, and also the placement of this 40-day cycle, which looks very dodgy, and we've got an inverted cycle shape here, which is not a very nice cycle shape. So there are question marks with this analysis as well. But both of these analyses on Monday started saying to us, okay, we're coming into that 40-week cycle early. Okay. Trading decisions are made on the basis of phasing analysis. If your phasing analysis changes, your trading decisions change. Okay? So, do we want to enter the trade? I like trading the 40-day cycle. Let's talk about the 40-day cycle. What is the short-term underlying trend for the 40-day cycle? That means the two cycles longer than the 40-day cycle. If this trough is a trough of the 40-week cycle, then the short underlying trend of the 40-day cycle is, of course, +2. Why? Because the 80-day cycle will also have troughed, and the 20-week cycle will also have troughed. Therefore, I've got a short-term underlying trend of +2. That's good. I want to buy. Okay? What's my total underlying trend? My total underlying trend will be the sum of all the cycles longer. Okay, let's add that up. 80-day is +1. 20-week is +1. Let me just cross that out so we don't confuse ourselves. 20